No price action strategy is truly complete without factoring in market volume. While price movements are essential, volume plays a crucial role in spotting trends, breakouts, and optimal trade entries or exits. Since volume is a leading indicator, it often shifts before price does. As traders, our edge comes from understanding how price and volume interact, allowing us to anticipate market moves more effectively. What is market volume? Market volume refers to the total number of transactions occurring within a specific period in any financial market. It reflects the level of activity and participation, with higher volume indicating greater interest and liquidity, while lower volume suggests reduced market engagement. For example, if a trader buys a currency pair in Forex or an asset in another market, and a seller agrees to the trade, that transaction contributes to the total volume. However, it's a common misconception that both the buy and sell sides are counted separately. Each transaction is recorded only once. Why volume alone isn't enough? Volume by itself doesn't tell the full story. However, when combined with price movement, it becomes a powerful tool for spotting market trends. For example, if the market is rising and volume is increasing, it could signal strong buying interest. On the other hand, if the market moves up but volume is low, the trend may be weak. Most trading platforms offer volume indicators, helping traders identify unusual activity. A sudden spike in volume often means bigger players are involved, which can lead to significant price moves. Price up plus volume up, strong bullish signal. When price moves higher while volume also increases, it signals strong buying pressure. This often indicates that large market participants are stepping in, adding conviction to the uptrend. The more volume behind the move, the more reliable the price increase tends to be. Why it matters. Confirms buyer strength. A rising price with strong volume shows that demand is high and buyers are in control. Validates breakouts. If price breaks through a key level with increased volume, it suggests the move is backed by real momentum. Reduces false signals. When volume supports an upward price move, it lowers the risk of a fake breakout or quick reversal. Imagine price trending upward, but then it accelerates as volume surges. This confirms that more traders are jumping in, increasing the likelihood of continued bullish momentum. If volume remains high on further upward moves, it reinforces the strength of the trend. Pro tip: if price rises but volume starts to fade, be cautious. It could signal weakening momentum and a possible reversal. Price plus volume down, caution needed. When price moves higher but volume declines, it signals weak buying pressure. This can indicate a lack of strong conviction behind the move, often making it unsustainable. Without volume support, the price increase could be driven by fewer participants, leading to a potential bull trap where early buyers get caught before a reversal. Why it matters. Lack of confirmation. A rising price with declining volume suggests the uptrend is losing strength. Possible exhaustion. If buyers are not stepping in aggressively, the rally may struggle to continue. Risk of reversal. Low volume price increases can be easily overturned if selling pressure returns. Imagine price gradually moving upward, but volume is shrinking with each push higher. This suggests fewer buyers are supporting the move, increasing the risk of a pullback or trend reversal. If selling pressure appears, the price may quickly drop due to the lack of strong demand. Pro tip: watch for a sudden spike in volume. If it comes with selling pressure, it could confirm a reversal. Price down plus volume up, strong bearish signal. When price moves lower while volume increases, it signals strong selling pressure. This often indicates that institutional traders or large market participants are actively offloading positions, adding conviction to the downtrend. The surge in volume confirms the selling momentum, making the move more significant. Why it matters. Confirms seller strength. High volume during a price decline suggests aggressive selling rather than random fluctuation. Validates downtrend. If price breaks a key support level with high volume, it signals potential for further downside. Reduces false signals. A drop in price with strong volume suggests the move is backed by real selling pressure, not just short-term volatility. Imagine price falling steadily, but then a sharp occurs with a spike in volume. This suggests that larger traders are offloading their positions, confirming bearish momentum. If volume remains high on continued declines, it reinforces the strength of the downtrend. Pro tip: if volume spikes at a support level and price stabilizes, it could indicate potential accumulation and a reversal. Watch for confirmation. Price down plus volume down, weak selling, possible reversal. When price moves lower while volume also decreases, it suggests that the selling pressure is not strong. This often means that large institutional traders are not aggressively selling, and the downtrend might be losing momentum. If buyers step in, a reversal could be possible. Why it matters. Weak selling pressure. A price drop on low volume suggests a lack of strong conviction from sellers. Potential exhaustion. If sellers are not driving the market lower with heavy volume, the downtrend may be temporary. Reversal opportunity. If volume starts to increase while price stabilizes or moves up, it could signal a shift in momentum. Imagine price drifting lower over time, but with gradually decreasing volume. This suggests that selling is slowing down rather than intensifying. If buyers step in and volume increases on an upward move, it could confirm a potential trend reversal. Pro tip: if price approaches a strong support level with low volume, watch for a volume surge. This could indicate buyers stepping in to reverse the trend. Institutions don't trade in small amounts. They accumulate or distribute over time. If volume rises significantly, it may signal institutional activity. Conversely, a price move with low volume suggests retail traders are driving the action, which is less reliable. Understanding volume trends helps traders align with market movers, avoid traps, and make smarter trading decisions.